Alrighty, everyone. Just finished the Friday night update on the website, and I thought I would get straight into doing the weekly video. So I got myself a glass of wine and just cracked open the bottle, and it won't be finished by the time I finish the video, but if my words start slurring, you'll know why. So it's Friday night, and we've just got through another week, an exciting week in the stock market, and crude oil as well. I'm going to start in dollar yen because this has been my headache over the last couple of months, and I'll fill you in why. So today I pretty much just bit the bullet and now expecting a kind of a further significant low in wave 2 here in wave 2 orange to complete over the next I reckon month or so. At that point then we can look higher again, but for the moment it looks like we are continuing to kind of close out this very large, if I can go to the daily chart there, this very large correction in wave 2. So we have wave 1 orange up there into the December 16 high, 118.67, and ever since then, we're talking about 13 months now of just basically sideways and sideways to down, and false signals in rallies and fail breaks and all that sort of good stuff that comes with a correction. But today, the switch in the wave count basically whips out that wave 1 there for this wave B, an extended wave B, which I'm doing this on the fly here now. Should have done this earlier, but anyway, an extended wave B in there, which it looks like a possibly an expanded flat, but again, sometimes B waves just kind of take their own life, and you just can't put a nail, or put a pinpoint exactly what's going on. So I shouldn't be talking and charting at the same time here. I'm a man. I don't do two things at the same time. All right. So we had that wave 1 up into the December 16 high, and obviously we're just continuing to complete this second wave here. It's fitting within this trend channel. The targets so far is in around the 104 area, and at that point then we should rally in wave 3, and that should take us to the end of the year in a major dollar turn. And that's been my thesis. The reason I'm kind of shifting right now is because this price has come so close to breaking. I think it's 107.29. 107.29. That's the invalidation line for the short-term bullish count that I had been working with. Okay, so here's the 4-hour chart, and this is. I'll go back to the daily for a second. This is wave A down, wave B up, and wave C is what I'm counting right now. So wave C of 2, and wave C, you can see here, is counted as 5 waves. So we'll see how that works out over the next week or so. But I think we can probably count it as 1, 2, 3, and a possible expanded flat wave 4 occurring, or maybe a running flat. I kind of favor a running flat now at the moment because of you see the previous wave 1 high here. Anything larger than, say, a straight flat or a running flat would threaten that 110.85 low there of wave 1. So you don't want wave 4 to break wave 1, and that would, if that happened, that would invalidate the 5-wave structure ongoing. So I think over the next couple of weeks we're going to see a break of this key support 107.29, and we're going to see a run into the lower trend line there, 104, 104.50. Possibly it might burn out earlier than that. We may just get a pop below the key support just to kind of confirm the 3-wave structure, where wave where wave C would break the previous. Let me get a line in there. So 108.17, that was the previous wave A. Then we have wave B, and then wave C should at least break 108.11, which it did today, but you'd expect kind of a solid break of that, maybe an inverse head and shoulders below the 108.11 level. So I think dollar yen in the, well, actually, let's get down to the short term. Let's get down to the hourly chart. So you can see this fourth wave here that I'm looking at. The previous wave 1 would be I still have to change out some of those charts, but previous wave 1 110.78. So you don't want this wave 4 to break 110.78. So you'll be talking any higher than 110.47 will really jeopardize the at least the short-term count anyway. The main reason I'm kind of shifting to the alternate count today is because the decline in over the last week has been pretty clearly in 3 waves there. You can see it sitting nicely in a trend channel, and a bounce then this evening says to me that 3 waves to the downside is a B wave. We should expect a C wave to the upside. So that would mean that there was a 3-wave pattern unfolding here, rather than a significant low and a return to a rally. So in general, you expect, or I expect, a run into, say, the previous wave A high there, below 110.78, maybe a fail below 110.78, or sorry, a fail below the previous wave A high, 110.48 or 9, whatever it actually is there. Let's see the exact high. The exact high is 110.48, so a fail below 110.48 as a running flat wave 4, that would suit quite well. This live charting must be awful exciting. So let's get rid of those scribbles. So for Monday, I think we'll see a challenge of up to 110 anyway, and at that point a reversal into wave 5 of C of wave 2. So over the next few days, the next few trading sessions, we should see a failed reversal and a continuation below key support. Alrighty, we'll know more on Monday. Obviously, if this 3-wave pattern plays out, then we get a further break below, say, interim lows here, 108.45, and definitely today's low at 108.01. So say the 108 level. You break 108 again, then we're spilling down to 104. So on the short side, there may be a kind of let's say opportunistic short on dollar yen down to the 104 level if it plays out. I'll go to this the Dow. We've had a rally into the close. I think this is going to be a bit of a dead cat bounce. I think we're talking about an ABC rally. And again, I think, well, actually that ABC rally, looking at the short-term pattern, you could call that rally 3 waves on the within that rally today. Let's see if I break out. If we break out into the 15-minute chart, maybe. Yeah. There you go. We have a 3-wave pattern pretty much complete. And that could be wave 2 there. This is an update, an even further update from this evening's, Friday evening's update. So this is real on the fly kind of stuff here. And it it hit I had a target on this evening's update of 24,350. So we've hit that 24,350 mark, and it's come down off it again, and it looks like it's in 3 waves. So we could have, as we are closing here on Friday evening, we could have, let's get that sorted there. We could have wave 1 and 2 in pink to the downside complete. I'd like to see on Monday, I'd like to see the price stay below that declining trend line there, and most definitely below 25,292. So because that would be the previous wave 2 in grey there. If we see a break at that, then we're gonna look at a larger 3-wave pattern, some sort of a flat occurring in a larger wave 2. But in general, let's get back to, say, the 30-minute chart there. In general, I think this overall rally into the 26,610 high is done. And we were calling that up here. So the decline off that high has been impressive, to say the least. We've got, into today's low, we've got 3,000 points over 14 days. So the high came in on the 29th of January, and it's now 9th of February. So you're talking, that's the 29th, I think, was it? 28th, 29th. So you're talking 12 or 13 days. That's like 3,000 points in 13 days. That's pretty serious action. Obviously, the alarm bells are ringing. Even within the media, people are questioning this, but it's still got a bullish tint to it. Like, it's still got this. It's just a shakeout. Weak players will leave the market, and we will see a resurgence to new normality. Actually, what I read today was this is just a shakeout. I think it was on Bloomberg, and some analyst was saying that this is a Barclays analyst was saying this was a shakeout, and you'll see a return to normality. So when he says return to normality, he means return to all-time bull highs. So he means continuation of ecstatic bull market forever, which is, I mean, even the most basic level of analysis would tell you that you cannot, no tree grows to the sun type of thing. You cannot go up forever. There has never been an expansion function or an exponential function that expands forever. It always collapses, always collapsing on itself. Population does that. The urban sprawl does that. Nature does that. In every aspect of existence, nowhere does there exist a function that expands continuously, an exponential function, that expands continuously. But in the stock market, an exponential function expanding continuously is the baseline assumption. So that just kind of adds to the idiocy of this market in general. So anyway, apart from that prognostication, let's get back down to business. So if this is true that we have had actually a 3-wave bounce off today's low, I think in the cash market came in 23,371, I believe. And if that's a 3-wave bounce, then we can see this completely retraced then on Monday, Tuesday. Right now, we are looking at a 1, 2, 1, 2, and a possible third wave to begin next week. So if you see, this is what to be aware for next week. If you see break of 23,370, then we're in business for a spill down into wave 3 pink. So that'll be wave 3 of 3 in gray. Let's go to the 4-hour chart just to kind of complement that a little bit better. So wave 1, 2, and then what we're talking about is 1, 2, and 3. So you'll see wave 3 of 3 next week, and that's the wave 3 grey is actually projected to about 20,750 at the moment. 2750 would put it at a 161.8% extension of wave 1, the Fibonacci extension. So that's stocks for next week. It's not looking good. Let's put it that way. Okay, so let's go to gold. Gold, this is the gold 4-hour chart. I'm still tracking this 1 and 2 pattern off the low. We have a possible bearish signal about to occur here in a moving average signal. But let's see. I mean, if that does happen and we get a further extension of this second wave, we'll deal with that in time. But we are hitting right now. We're hitting pretty decent levels of previous support here. We got that previous wave B here at about 12.99. We got the other interim high there in October 17 at about 13.03. So we're right in that kind of cluster of support there. So then if we get a bounce of that 50 period moving average off the 200 period average, then that could set the ball rolling well higher in wave 3 green of wave 3 red. Okay, so the 30-minute chart, I'm looking at that second wave there, that wave 2. We'll actually go back to the 4-hour chart for a second. Let's get a Fibonacci retracement for wave 2. Let's say the 50% retracement would come in at 1300 on the button. So 1300 is a good place to bottom right now, and we're right in that zone right now. Okay, so the 30-minute chart, I'm charting a kind. It would be a complex flat. So we've got ABC down in ABC, an ABC expanded flat wave B, and an ending diagonal, possibility of an ending diagonal wave wave C. So we've got an ABC in wave 2. We're right down to the low came at 1307, was it? 1307 cash, 1307.35, and we had a nice spike of that. Again, we'll see how this plays out early next week. I think if we get a push up into the 1330 area again, we should probably view that as a third wave 3 pink there. So 1330 looks like the we have a wave 1 low here actually, 1326. If we get a break of 1326, that would be the previous interim wave 1 down in wave 1 of C, and if we get a break of that 1326, well, that will kind of indicate that the market is kind of rejecting the downside, and it would also complicate the count further to the point where it would invalidate any further bearish outlook. It would really push the bullish outlook if we got a push back up into 1330. So let's look for that on Monday. Let's look for 1307 to hold and a push back up towards 1330. Playing for the long haul here right now. So I'm already long gold for a long time. So if you're looking to get in, next week could be kind of prime territory to kind of start testing the market to the upside. Let's go to crude now to kind of finish off on these commodities, metals and commodities and stocks. So we have a pretty serious break of previous support, which was the previous. Let's get that line back in there. This previous wave 3 high here. So that line was like 59, pretty much 59 on the button. And we got a nice punch down through that, and the market is pretty much finishing at 59 as I speak. So it's looking very, very, very bearish for crude oil right now. And the reason I say that is, let's go to the 4-hour chart. This whole rally that we were tracking in wave C of 4 is going to be completely retraced, given if the current short-term count is correct, and given that we're looking for a wave 5 down, well then this whole rally in wave C and larger again, the whole rally in wave 4 will be retraced. So we have a low. It should initially break below $27, but I think we'll be looking below $20 for this to complete. And that's the initial decline we've had there. I'm looking at the daily chart here, so it's a 3-wave rally in wave 4, and we're looking at the end of the line for this kind of are we talking a 2-year kind of drift to the upside. Within the last couple of months has been a nice punch higher, and we did manage to catch a good lot of that. So I'm pleased for that. Right now, if you're going to play a long term, we would look for kind of a failed kind of, let's say, a test of the 59 to 60 area in a 1-2 larger kind of wave 1 and 2 in blue. If that happens, we're definitely looking, for prices to probably crash by about 60 or 70% at this stage. The first real serious support is at 55, so we're pushing towards that serious support there now. We have a kind of wave A in around we have wave A high in around the 52 area. The internal wave B of that triangle sits at 55, and we're closing out this week at 59. So on the short-term chart, we have an upcoming support at the previous 4th wave there in blue at 55 again. So it's looking good for the downside here. Definitely, we're probably a little bit oversold right now, but we're looking for a bounce in a 4th wave. So early next week, we're probably going to see that kind of drift upwards in a wave 4 up towards the $60 mark again, and we should see a 5th wave close out this 5-wave pattern. Or sorry, we should see a 5th wave close out wave 3. So for the next week or so, we're going to see an early recovery on Monday and possibly Tuesday, and then for the rest of the week, I'm looking for further declines, probably down below key support there I have it at 56 here, and that would be the previous lows there of wave 4. You see that wave 4 here. Okay, so crude not looking good. Probably an early recovery on Monday and Tuesday, but in general not looking good next week. So let's go back to mixing it up. Is kind of confusing me. I usually just start at euro-dollar and work my way through. I'm kind of a creature of habit in that sense. Okay, so this week we kind of changed our tack to the downside, and so far so good. It's looking okay so far. We had a kind of, let's say, a leading diagonal in wave 1, 3-wave recovery in wave 2, and we're looking at the unfolding of wave 3 to the downside. I would expect a little bit more. Price seems to be failing at the key support there of the previous 4th wave. That's 122.20. It's kind of failed through that twice, but we could be seeing like a contraction of range there, possibly wave 4, internal wave 4 within that 3rd wave. So then again, we could be seeing a further 1-2-1-2 pattern to the downside. For next week, I definitely want to see that key support go early. If we see this 4th wave, if in fact we do see a contraction triangle 4th wave on Monday, then by Tuesday this key support should give, and we should see a break below to complete wave 3 brown. Again, I've got that alternate count right there showing 1 2 1 2 pattern. There's also a distinct possibility right now. We'll just have to see on Monday if it is a series of 1-2 waves to the downside. Then we're looking at probably a rally back up to the 123 area. Failing around 123, let's see the previous wave 2. Failing around 123 to 124 will signal a bearish turn, a completion of wave B black, and a run down back into wave C and down below parity here on euro dollar. Let's see. Each day as it comes. I'm a very kind of methodical kind of hands. I purposely tie my own hands behind my back when it comes to my trading. I want to see a significant number of indicators stack up in my favor before I start diving in. But so far so good. We're looking at a turn in euro dollar. Let's see how that plays out early next week. So I think we're going to finish on pound dollar here. Pound dollar again is, you can see on the 4-hour chart here, we've broke down through the just this evening we broke down through that 200 period moving average. I'm going to put in the I don't have it, the 50 period moving average. I should have that. We haven't had a death cross there yet, but that's probably coming. So we're looking at let's get to the short-term chart. We're looking at wave 1, 2, and possibly 1, 2, 3 to the downside developing today. So early next week we could be talking about wave. If we see declines on Monday, we could be talking about wave 3 of wave 3 brown to the downside. Key support 136.15. A break of that will pretty much confirm the bearish viewpoint. And let's get out to the 4-hour chart again. I should have that key support level in here, 136.15. I'll put that in the 4-hour chart. 136.50 I have in there. Yes, sorry, that's probably the previous low there. So 136.15, the previous internal wave 1, I think that was. So actually we've got 3 nice levels kind of clustering here. 3 previous peaks at the previous wave B at 136.54, previous internal wave A at 136.53, 135.53, and this this previous peak, I think that was an internal wave 1. So that comes in at 136.15, I think the high was. So within 100 points, we have 3 significant previous peaks. So the first one would be 136.54. Today's low, let's get to today's low reached 137.63. So we're not far off that at all. 136.54 comes in around, let's say here, this level, 136.54. So we're not far off it. On Monday, it looks like if we're looking at spilling down in a third wave, well then this should 136.54 should give on Monday. The price should start kind of tagging the lower trend line here of this price channel. So far so good. Again, we've got this 1-2-1-2 pattern and a breakdown off the previous one, second wave 2 high. So next week is not looking good for pound dollar. A little bit on the fence about euro dollar. Dollar yen looks like it should find a low soon enough, within the next couple of weeks, a significant low, and again eventually these 3 pairs should start to kind of let's say reach a -1 correlation again. So dollar yen should start rallying, and these euro dollar and pound dollar should start declining significantly. We've been kind of topping out and kind of chopping and ranging for the last month, so it's been pretty damn boring in general. But there's one thing you can say about markets is that quiet periods are always matched and usually outshone on the opposite side of that. So that's been me for the week. I hope you have a great weekend, and we'll see you all on Monday again. Godspeed.